Name's Kirk Marley with Dovetail Planning, and I've got another good story to tell. I think generally my stories, at least they're interesting to me because they happen to me, but I think they have application. I got a call from a client that I'd had for a long time, and had done some planning, actually succession planning, and they had a nice business. A bunch of boys who were slated to take over the business someday. They developed a really wonderful business. And so we sold a little bit of insurance. It wasn't what they needed for transition, but they bought a 20-year level term policy for $1 million on the dad. And the dad was going to leave his share in the company to the mom, and the boys or boy was going to buy that from mom. So the idea was it was going to be spousal protection, but transition. The dad still owned the policy. We didn't get to the point where the boys were going to own the policy. Because down the road, all of the boys got an education in some other field, and then they ended up going away. And so they had this lovely business that ended up being a liquidation. And so I talked to them, I think it was, I knew the liquidation was going on because we had been in contact maybe 15 years after we had spoken, and because I wanted to see where things were going. And they both told me, well, the boys are gone. They made their own fortune somewhere else, and so we're trying to decide what we're going to do. In the end, they decided on liquidation. So they liquidated really everything but the land, equipment, all income-producing assets were gone, and they just had land assets inside of this company. But they had no debt, and there was no real compelling reason to continue having insurance. So year 19 comes around, they had one more year of level premium, and it was $1 million on a really large man, and very powerful man, not I would say unfit, but he probably was 350 pounds and maybe 6'7", 6'8", but real powerful man. His boys were all the same. It's just really fun people to be around. But anyway, I had this $1 million policy on him that at the end of this 20-year level term, it was I think it was about $3,900 of what I about remember. Pretty inexpensive. And the mom called me and said, well, should we keep this insurance on dad because we don't have any exposure, we don't have any risks to transfer, we got nothing, we don't really need the insurance, we have no debt, we're set for retirement, we're good. And I said, well, if you were to try to replace that insurance today, on the male who was, not as healthy as he was 20 years ago, it might, if you could even get insurance, it would for sure be, 5, 10, 15 times that premium. So I thought, for the premium, $1 million on this guy you should keep it. And I had no real reason to make that recommendation because with life insurance, not all types of life insurance, but term insurance particularly, it's an upfront payment to the producer, the agent, for selling the contract, and then you're sort of out of it. In many cases, you don't get paid at all as they pay the premium. So, which is fine. It's just, I was paid, so, But she came to me, and I had no real reason to have her make these premium payments, but I thought, what would I do? It's inexpensive insurance. You could never duplicate it, so keep it. Hopefully nothing happens to him, but if it does, it was money well spent. And so fast forward 6 months after she decided to take my advice and make the premium payment. Well, the man was out working on his property, and a large piece of equipment rolled up on him and pushed him up against a berm. And when they found him, he had his cell phone in his hand. He was trying to make a phone call. It didn't look like he had suffered a lot, thankfully. But it just compressed him enough to where he couldn't get a breath. And so in trying to find help, he got the phone out, and that's where they found him, like that. But we paid that $1 million claim, and that gal was really happy that I had not convinced her, but advised her to pay that premium, because that gave her some additional ability to support a charity that she loved but didn't have she had retirement income, but not liquidity to do some of the ancillary things that she'd always dreamed to do. Very nice family. And so that insurance did what it was supposed to do. Even when, if you think about insurance, insurance is a transfer of a risk. Dovetail, we try to quantify the risk before we ever make a recommendation of an insurance product. Because we don't sell insurance just for the kick of selling an insurance policy. So if you think about this particular one, the risk really wasn't there because they didn't have debt. They had retirement set up. There was no transfer issues. But making the recommendation to keep the insurance because the value was there was why I was doing that. And it was exactly what she needed to have.